What's up everybody, Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm giving you 3 easy to follow, simple to use tips that will allow you to trade on margin with no fear of liquidation. Guys, margin is not the boogeyman. Margin trading is not hard. It is not inherently bad or higher risk. It is not inherently anything. It is what you make it. With that being said, first and foremost, we have to know one thing. We have to know how margin is calculated, how is the liquidation price calculated, and I'm going to break that down for you first. That is number 1, knowing margin. Alright guys, so I made this quick little slide just to show you how to calculate 10x margin, especially how to calculate the liquidation price. So this is just a quick breakdown. This is an example of price action, of an example of an investment, and how to trade said investment. You put $500 into a KuCoin account. You have $500 in the margin account. You have options, like preset options, to go 25, 50, 75, or 100% on any trade. 3 of the 4 options are no-go. Never go above 25%. And I'll show you why here. Execute a trade with 25% of your account. That is $125 out of your $500. With 10x leverage, that trade is now worth $1,250. The trade value minus the initial investment is liability. So your trade value, $1,250, minus your initial investment is your current liability, $750. Whenever you execute a trade on margin, because you're getting 10 times the amount that you want to trade, your initial investment gets pulled in as collateral. That $500 is now part of your liability. It actually keeps you from having a total liability of the $1,250. That's what makes that difference. So your initial investment, you will show you have no USDT left. Just to make sure you have a heads up on that, it will show 0 USDT. $750, your liability, divided by $1,250, the initial trade value, will be your initial debt ratio, 0.60, or a 60% debt ratio. At 60% debt ratio, liquidation will occur at a 40% decrease in the asset value. In other words, when the trade value drops to the same level as the liability, so when $1,250 drops down to $750, then you are liquidated. That is it. Your account is cleared, the $500 is gone, everything gets sold, and the exchange takes everything. Just a heads up, KuCoin liquidates at 97% debt ratio. So they don't allow you to go 100% before they take it, and whatever that 3% left is, it could be $10, whatever is going to be left in your account. But they liquidate before 100% just to make sure they don't lose any of their own money. Guys, they're lending you money, giving you money to trade more than what you have available, so they're not going to lose. The exchange will not lose. Know that. 100% fact, will not lose. Now that you know how the calculation is made, how you can identify your debt ratio and your liquidation price and your liquidation point, now we can go into look at some charts to show how we can be smart with trading on leverage. All right guys, first rule is out of the way. We now know exactly how margin is calculated. How is the liquidation price calculated? We know all that now. We know how you can lose all your money, but now how can you prevent that? So rules 2 and 3 work together. Rule 2 is to avoid at all costs. As a new trader, new to margin, avoid at all costs starting any trade or ever being above a 60% debt ratio. And that will be the 25% of your total available account. Never go above that 25%. You can see right now I'm slightly above it. I'm at 68.72, but I'm aware of that, and I'm aware of why I'm there. I saw a second trade that I liked. My first one wasn't done yet. I was at 60%. That trade had jumped me down to about 50, and I was able to jump into something else and be in 2 trades and still only be at 68%. And now I know I have stop losses, and I have a profit stop on one and a stop loss on the other, to where I know I still cannot get liquidated. But until you are completely aware of your stop losses, your profit taking places, your areas of resistance and support, until you are completely aware of all of those things, keep it simple, 60% max, and you should never be able to lose. Now, the third rule is learning to know where to enter and exit trades, especially exits, because you can make mistakes on entries and you can be okay as long as your debt ratio is not too high, but look to know your exit. Here, I drew this pattern, and in my last video, this was a breakout I was waiting to see, and it's been in a triangle pattern here. You can see there's been a support line at $1.07 where it's hit multiple times. I was watching this come down for the third time, and I made the video somewhere in this area here is where I made the video. So I put a buy order in for $1.07, and it hit here on Sunday. As soon as I made the buy order, I also knew where my next strong level of support was, so that I could set a stop loss just a little bit below that. So I knew that if I lost a little bit, and if it wicked down and did something a little scary, then I wouldn't get stop loss and it would just bounce right back up. I drew this line here because this was a resistance and a support multiple times. It kept bouncing back above it. Go back even further. It was a resistance here multiple times. And it's $1.05. $1.05. It's not a huge difference from $1.07. Really not a huge difference, but 105 is like a psychological, it's a round number, $1.05. And it seemed to be something that hit multiple times. So this was the support that I was looking at. You see how we had that long wick here? Something like that could happen again. And if it gets me, it gets me. But I'm going to go down to the next level, go down to 103, because this is my next area where I'm looking to say, if it goes below 103, I'm out, I'm done. I'm done. And from 107 down to 103 is losing roughly 35%. And that's a big loss, but it won't get hit easily. And I'll have room to make adjustments. If I see that I don't like the way this trade is going and it stays really close in this area, I can sell out at a smaller loss. It doesn't matter. But I know that 103 is going to be 103.1.032 is what I'll put it, or 1.033. And I'll show you how to do that now. So I'm on 10x margin. You want to create a stop limit order. And you want to make sure that you do not have auto borrow enabled, because auto borrow enabled will create a short instead of selling. It'll actually create a short, and you don't want that. So stop price 1.033 and the price 1.0327. I'm at 100% on my XRP. So the stop 1.033, it will start triggering my sell order, and it will sell down to 1.0327. It'll sell anywhere in that range, just in case it's a quick spike and the 1.033 is gone before the sell can be done. You have a little bit of a range so that you can sell and get out of the trade if it's a very fast dump, if a flash crash or something. So stop limit on 10x margin, stop price, limit price, or stop price, sell price, and then there my stop order is in play. So now I can go to bed, I'm good to go, whatever I need to do, and I can just watch this run. Now, how about getting out? How about selling for profit? I've got 3 areas that I see for profit taking. This has been a resistance in the past. This has been a resistance in the past, and this has been a resistance in the past. If I sold the first one, I could already be out of XRP if I sold this first resistance level, because it did hit it today. From 107 up to the top of this range is 79.9%. Let's just call it 80%. 80% profit today in 2 days. Not a bad deal. I didn't like that first area. I thought that would be an easy blow by. And I wanted to get at least to this one before I sold half. So then if I get to this range, I'm looking at 10.5, so 105% profit here. And then the last range would be all the way up to 146% profit. Now, if it hits this range and I sell half and it starts to dip and I don't like the way the market's looking, I will change my stop limit from a stop loss to a profit stop and put it back at this level. And say, you know, I got half my sell here, I got half my sell here, and I'm good. I'm at an average of 100% profit. I'm good to go with that. I have no qualms about that. I have no issues with that. So between 80 and 105. So let's just say the average would be about 90 or 88 to 90% profit there. Got no problem with that. No problem whatsoever. If I get sell half here and it gets up to here and I sell my other half, now my average is between 100 and 140. So averaging 120% profit, absolutely great. Huge deal, great deal. So with that being said, guys, those are the three things you have to know. You have to know how the margin is calculated, how the liquidation price is calculated. Know that keep a tight debt ratio. Keep it below 60% so that you have room to make mistakes. Make sure you give yourself room for error. And then third, know your exit points. Know your exits for a stop loss. Know your exits for profit taking, because you don't want to stay in these trades for too long. Margin trades, because you're on leverage, you don't want to sit for too long. You don't want to have the potential of a flash crash or something liquidate you because you were in a trade for too long. So with that being said, guys, that's the video for today. I hope you enjoyed. As always, until next time, peace.